Welcome back to Strong Man Personal Finance. Woo! Good morning, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon by my book, bro. And I'm bringing back the intros. I got to pump up my book numbers like all these clowns pump up their stocks. So in this video, we're going to talk about Carvana. We're going to talk about Carvana stock because apparently it just got wrecked. And you got to ask yourself, why? Why did the stock go down? Is this a good buy? Is Carvana the future, bro? Or is it hot freaking trash? Well, let's go look at the earnings. Let's go look at the historical performance of this stock on financial metrics. I'm not looking at the stock price like you freaking clowns like to do. Oh, it went up a lot, buy it. And we'll see if Carvana's delicious, superstitious. You know what dishes, okay? Oop, gotta share my screen here. Sorry. Oh my God, I'm so stubborn. All right, here we go. So here's Carvana. It's down 20%. Now, it says today, but I believe that was the last trading day because I'm filming this on a Sunday, and it's definitely not down 20% today. Robinhood, you need to fix that, okay? But it went down, looks like 20.5% on Friday. Why? What? I thought this was the future, bro. Don't they have, like, car vending machines, and they're all bright and shiny? All right, we go back. And we see over the past 3 months, it's up 1%. Wow, that's probably VT, guys. And over the past year, it's down 94%. Now, I'm no market expert, okay? People make fun of me. They're like, strong man. When a stock goes up, that doesn't necessarily mean that it's overvalued. And if a stock massively crashes, that doesn't necessarily mean it's undervalued. And that's 100% true. But when you see a stock go up like this, and it happened during a lockdown, it happened when the entire economy was shut down because of a global pandemic, and a company that never made money before suddenly explodes in stock price and continues to lose money, there's probably something not right there, okay? And that's what happened to Carvana Moana. Plus, the used auto market with rising interest rates, and oh my Lord, it went crazy. Now, remember the used auto market, right? Because Carvana, they buy and sell used cars. That's how they make their money, okay? They have these cool car vending machines. Oh, wow, I want that one, mommy. Mommy, what's that car, please? They, I completely distracted myself. So, like I said, they sell used cars. And when the pandemic started, the stock absolutely exploded. And everybody thought it was the future, bro, because used cars were selling like hotcakes, man. Like the prices of used cars went absolutely nuts. Everybody was demanding a used car because there was all these supply chain issues with new cars. And was it partially responsible due to crypto? Because like there was like chip shortages. But basically, people needed new cars and they had a hard time getting a new car. So they would go ahead and buy a used car. And me, myself, I went ahead and bought a used car right during the pandemic. And it kind of sucked because used car prices were out of freaking control, okay? So Carvana, they actually had a huge spike in revenue because the prices of used cars went up massively. But here's what happens, okay? They're buying and selling cars. Now, assuming the prices keep shooting up exponentially, that's going to work out great because you buy the car, prices go up, whatever, you sell it for a higher price. What happens if the used auto market starts to collapse, right? And all those used cars that you bought recently at high prices that you thought you were going to flip, now you have trouble starting to sell them. Well, what happens is you bought all those cars at high prices, and now that this retail, now that the price you're trying to sell it at goes down, your gross margin is going to get worse and worse and worse because your cost of goods sold is going to be higher because the cars that you bought recently, you paid a ton of money for them, and now you're selling them in a market that has declining prices for used cars, okay? That's basically what's happening, okay? Because when you buy and sell cars, the recent cars that you sell, they're going to be pretty expensive, okay? They're going to be a big expense on your balance sheet, on your income statement. So basically, Carvana shot up, right? It went all the way to $360. Oh my God. What was this before the pandemic? It was $110. Then it collapsed down to $29. Oh, if you bought that stock on the dip, oh my God. And it went up to $360. Something like that with an unprofitable company, that's terrifying, okay? And then the used auto market went to complete crap, okay? Interest rates went up. They just became too expensive. It's crazy. I can't imagine buying my car now. I don't know what I'd be paying for my freaking car right now with these interest rates. The market has absolutely freaking collapsed. It's been punished. And now Carvana is $8. It hasn't been that low since, holy crap, when was it $8? This is like a massive low. It's down 62% in the last 5 years. Now, if we go look at the financials, right? This is their annual results. So you can see that, their revenue it massively spiked in 2021, 2022. Okay. Their retail units sold have absolutely exploded. Okay. Because there's a lot of demand for used cars. And you can see they were growing their car vending machines and all like the upfront metrics are great. Like, oh, sales are up, vending machines are up, blah, 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 revenue's up. Everything's going swimmingly. Look at that growth. Well, when you have a market like that absolutely exploded, when times change, you're going to expect the revenues to change. You're going to expect the units sold to change because markets can be cyclical, especially the car market, which I believe is probably heavily tied to interest rates, okay? So now I look at this and I say, okay, they had a great 2021 and 2022. Did they make any money during those years? Well, we go look, and I got Carvana here and I got CarMax, okay? Let's look at Carvana. Did they make money at any time in any quarter during 2022? It looks like no. It looks like throughout 2022, they had losses, and they were getting worse every single quarter as the market was deteriorating. And even in 2021, okay, they had one quarter where they had a 0.66% profit margin. This is after a massive explosion in used car sales, used car prices, all of it. And you mean to tell me that they barely eked out a profit then? Their highest gross margin, it looks like, was 16%. So if nothing changes, unless they cut other expenses, operating expenses, they're going to have to go back to a 16% gross margin to even break even. Okay, that's a crappy profit margin. That's scary because a company that has that low of a profit margin can easily not be profitable the next year. And even if they fix their crap, okay, let's go look at Carvana. So I've noticed, or CarMax. So I've noticed CarMax has, lower gross margins in general than CarMax or Carvana. But even their profit margins were not that high. Their best profit margin over the last 2 years was 5.6%. I mean, this is not a very profitable business, okay? And it's sad that Carvana can't even pull a profit during the time where they most likely could have and should have turned a profit. Absolute insanity. Look at the profit. They've never been profitable except for one quarter, and that was barely profitable. Look at the operating margin. Same thing. Only one quarter where they were profitable. Gross margin shot up, peaked out in 2020, and then has collapsed ever since then. They have so much to fix. They have so much to grow before they even break even on profits. And you mean to tell me this company is the future, bro? Let's look at the free cash flow margin. They never had positive free cash flow, ever. They came close one quarter. You can see the little blip right there, but they never had positive free cash flow. Can someone explain to me why this business would interest you? Oh, it's growing a lot. It's got great revenue. Bro, during the time where they should have made a profit, where the market went insane, they still didn't make a profit. When are they ever going to make a profit? Absolute freaking madness, okay? So, I mean, we can go look at their balance sheet real quick. Are they underwater for equity? Yes, they have an accumulated, their total stockholders' equity is negative. They now have more debts than liability, or they have more debts than assets, which is pretty freaking sad, okay? They have total current assets of $5.4 billion, and they have total current liabilities of 2.5. Let's see. They have let's compare their actual current assets. So it's actually terrifying here because a big part of their current assets is inventory. A big part of it. Almost $2 billion of those current assets are vehicle inventory. And every time they sell those, they barely eke out a profit on them. Okay. barely eke out a profit. So they have to sell them, number one, and then number two, the cash they receive probably ain't going to be that much. All right. But if you look at their cash and cash equivalents, they have $434 million. They have accounts receivable of 253, and they have finance receivables held for sale, which is an interesting nomenclature. Their receivables have absolutely exploded. Okay. Overall, they don't have a great amount of liquid assets, especially when you look at their accounts payable and a short-term credit revolving facility and the current portion of long-term debt. They're on dicey water when it comes to paying off their short-term debts, okay? It's all going to be really dependent on these finance receivables and when they can collect these and convert these to cash. It's a little risky. It's a little terrifying, okay? Let's see what their total, liquid assets are. 434 plus 194 plus 253. So they have 2.2 billion of liquidish assets, okay? And they have more than that in debt, in short-term debt. That's pretty terrifying to me, okay? That's just my opinion. Now, the funny thing is, I noticed here they have this huge increase in property, plant, and equipment. Did they go on like this investing spree during the pandemic? Like, oh, we're doing so great right now. There's no way the auto market could reverse. There's no way the Fed could raise interest rates after this clown market and this massive inflation. Oh, let's make a bunch of investments. They poured $1.5 billion into property, plant, and equipment. They went on a spending frenzy, it looks like. And that's going to affect their gross margin because you have to expense that over their useful lives. So they went on a big spending frenzy. Let's see, operating. So really, besides that, nothing really changed with long-term assets. Let's look at long-term debt. So their long-term debt, they packed on a lot of debt. They packed on $3.3 billion of debt, long-term debt in the course of a year. I don't know, man. And you can see the only way they increased their equity was through issuing stock. Like, come on, man. Like, they issued a ton of stock, a ton of debt. They poured a lot into property, plant, and equipment during the height of the market. And now they're in a situation where they literally have more debt than assets. I mean, you look at their current assets. If you exclude inventory, they're not doing that great. They're really not. Okay, so they could potentially go bankrupt. We could look at we already basically looked at it. Basically, their profit margin is absolute garbage. Oh, what's this? Goodwill impairment. Did they have Goodwill on their balance sheet? Wait, what's that? Where's their Goodwill? Oh, here. Okay, this is weird. So in December 31st, 2021, they had $9 million of Goodwill. In 2022, they have $0 of Goodwill. And yet, in the last quarter of 2022, they wrote off 847 of Goodwill, 847 million. So what that tells me is they had prior acquisitions at the end of 2021. They acquired something in 2022. They paid more than the fair value of the net assets, and then they wrote it all down. So they bought something in 2022, and then they overpaid for it, which is always necessarily a bad thing, and then they wrote it down. Now it's all gone. There's literally no Goodwill left on the balance sheet. What a disaster. What do they buy? Who did they acquire where they had to write down the entire Goodwill? So they go in this stupid spending frenzy. They pack on debt. They issue stock. They buy property, plant, and equipment. They acquire a company, which they then have to write down on their balance sheet, and it crushes their income statement. What are they doing? Let's see. When you're an investor, you gotta like always think, are times good or are times bad? And can the good times change? When I was looking at the clown market, I was like, can this last forever? All these clown stocks going up, super low interest rates, stimmy checks getting pumped into the economy. No, of course that wasn't going to last forever. Do you think this massive spike in the used car market was going to last forever? Where used cars went up like, I don't even know how much percent. Of course it wasn't going to last forever. And what do these clowns do? Looks like they went on a spending frenzy. That's what it looks like to me. Oh, let's buy some more PP&E and this and that. Oh my God. Okay. So, looking at their income statement, I see this big non-cash Goodwill impairment. It's a non-cash expense. And they had a net loss before income taxes of $1.4 billion. Oh, my Lord. So even if you exclude the goodwill impairment, right? Let's take out the goodwill impairment. So we take 1,441 minus 847. They have, if you take out the goodwill impairment, they lost $594 million in the last 3 months on the accrual basis of accounting, divided by total sales. So even without that goodwill impairment, they had a loss of negative 20% before taxes. Oh my God. What a freaking joke. This company's a joke. They lost $7.06 per share. Oh, baby. So you lose money, you get diluted. They had a huge spending frenzy. You're buying a company that has more debts than assets. Is this like a company to potentially invest in, strong in? I don't know. Maybe you should buy VT. Okay, so let's see. Statement of cash flows. I'm trying to see if there's anything like unusual on here. Okay, the goodwill impairment's added back because it's a non-cash expense. Equity-based compensation, Joseph Carlson, there's the fraud. There it is. They're manipulating you. Stock-based compensation. They're adding it back. Doesn't make sense. So they burned up $1.3 billion of cash from operations in the past year. $1.3 billion. And they also, oh my God, they paid $2.1 billion for an acquisition. $2.2 billion. And then they wrote down all the goodwill. These people are clowns, man. Who did they acquire? Who did they acquire? Acquisition. Let's see if we can find it. The acquisition of Odessa. Was that it? Acquisition of Odessa. One of the biggest milestones of 2022 was the acquisition of Odessa's U.S. physical wholesale auction business. We believe we seized a rare opportunity that further solidifies our path to achieve our long-term goal of becoming the largest, most profitable automotive retailer. Oh, yeah, bro. We're going to buy businesses that we're going to have to massively write down. We're going to massively overpay for a business and then write it down in like a couple of months after we buy it. What a freaking joke. Okay. You know, they could have waited a little bit for this. But of course, they're like, oh, it's the height of the clown market. Let's pay as much as we possibly can for this Odessa clown company, whatever it is, okay? So I guess this is what they bought, that they had to massively write down. They massively overpaid for this. This is like Teladoc, my truckers, you know what. All right, that's my thoughts on Carvana. Do some comments. Somebody just texted me and said, put a shirt on. What a dick. Hand pink waving. Carvana lip banana. Face red. Are these wait a minute. Are these whatchamacallit? Emojis? They're not showing as emojis on my end. They're showing as, so this is hand pink waving. All right. Well, that's hopefully that's not an emoji. Then I have face red heart shape. Okay. I guess that's an emoji. Buy the dip, bro. Yeah, but buy a company that's has more debt than assets. Yeah, you should do that, man. Kid Fresh, you'll buy it. You know, it's a efficient market hypothesis. That means you can just buy any clown stock. Doesn't matter. First, it's going out of business. I mean, it may. You never know. You never know. But it's losing a lot of money. And it was never profitable except for one quarter. Carvana's lucky to still be here in a couple of years. I mean, if you want to do like a complete gamble play, maybe. I mean, there's always a chance it could survive, but that could be for any clown company. Stock mode makes me wet. Yes, I agree with that. Expose Chris Norland. What is there to expose? He's a clown. I'll do it. Carvana will go to zero. Just buy Tesla. I'd rather buy Carvana than Tesla, just out of principle. Don't trust this guy, clowns. He doesn't know anything about investing. You're right. You're right. You got me. I'm a clown. Chris Norland is an ex-professor, Ivy League educated, and is friends with high-level people on Wall Street. According to Chris, I know high-level people on Wall Street. Oh, no. Yes, I'm very sophisticated and well-connected. Loser. If he's connected with people on Wall Street, that terrifies me. Carvana bought a whole bunch of inventory at the peak. They're taking a massive L. Exactly. That's obviously what happened, because when you buy inventory, it first goes on your balance sheet, right? And then you have to expense it. So there's the inventory they bought a couple months ago, or maybe a year ago, or whatever, that they're now selling, that they paid a massive price for. It's now hitting their income statement, and it's reducing their gross profit. So they were just like buying and selling and buying, and they thought it would last forever. That's just part of the business, I guess. It's buy and sell, bro. Carvana offered me 15% more than I paid for my car after 2 years and 10K a month. Woo, baby. Did you sell it? I had to buy a car. It pissed me off. I have two kids. We're like, okay, because I had a Ford Fiesta. My wife had a Ford Focus. Was it a Focus? Yeah, I think it's a Focus. I forgot my wife's car is. But we had these two small cars. And then we were like, we need a van or something with 2 kids, the strollers, all that crap, the car seats. Because you literally can't fit a car seat or 2 car seats into a Ford Fiesta. You can fit one if you put it in the middle. You can't fit 2. You cannot. So we're like, okay, we need to get a van. And of course, it was like the peak of the market. So, I mean, I can afford it, but I'm not happy paying these car payments. But you know what? I'm not paying that car off because I'd rather buy VT. But Dave Reynolds, you're so stupid. You mean you want to buy every stock in the world except paying off your 2.59% or whatever interest rate car loan? You're so stupid, strong man. Whatever. Joe, Chris normally doesn't have a job, no successful business, just hobbies he's tried out. He comes from wealth. Man, I wish I could just not have a job. Man, you know how easy life would be if I didn't have any kids, didn't have a house, was just a professor. Oh, I'm a professor. Yes, I'm a professor. Life would be so easy. Who on YouTube or anywhere is saying Carvana is a buy? I'm sure there's someone that is. He has money to fund his hobbies and live in different places when he wants. From his parents, smells like nothing wrong with that. Who knows? Do VT versus VEQT. A cutie. Let's see. Okay. I don't even know. You guys are having this weird conversation. I don't even know what's going on here. LOL. Cole and I are live too. Oh, you are? StreamYard fudged up the emojis. Yeah, I was like, what is this red hand wave comment? Like, people are freaking weird, man. It's like, oh, wait, it's an emoji. Let's see. Yeah, NVIDIA video. Okay, I mean, like, NVIDIA. Okay, I mean, I can do it. I can look at the financials. I don't know NVIDIA, like, in detail. I don't sit here and analyze NVIDIA stock all the time. Red stock mode money all gone. Keep the shirt off. I'm getting a semi. On a serious note, what do you think about Texas Instruments? I have not spent 1 second looking at Texas Instruments. I don't do any. I just look at the financials. Like, I do zero prep before I come on the internet. Besides pulling up the report before I go live. What's the deal with Primerica stock? Oh, I hate Primerica. I don't care if it's a buy or not. I hate Primerica. I know you only put 10%, 5%. Why the obsession with Chinese stock? Maybe consider European, Australian, Latin Americans. I've already explained this, guys. Okay? I've already explained this. Where did the green screen go? It's actually sitting right over there. You can't see it, but it's in a bag, and it's right there. One day when I set up a new place for streaming, I'll set it up again. Did Meat Drunk scam shill Carvana? I wouldn't be surprised. All right, guys, that's it. It's a clown stock, okay? It's a total clown stock. Talk to you later. Cheers.